Let's get back to Oliver Slope. Oliver, you're probably too young, but there is a store, or a few of them, in Chicago called Moo and Oink. Maybe you've heard of them, but they specialize in, believe it or not, pigs and beef. So there you go.
I'll have to make a special trip this weekend to go hunt one down.
Bring the kids.
Yeah. Well, a lot going on in the livestock markets. Obviously, we've seen quite a bit of volatility in the cattle market. Basically going back to yesterday's release of the USDA report, feeders are lower, and rightfully so. We're starting to see corn attempt to carve out a low. If it's a low or not yet to be determined, right? But I think a lot of this also goes back to the macro picture, which we kind of talked about in the grain segment. We got some better than expected inflation data this week, and that's got, I think, a lot of money managers reaching for other assets, and you're seeing the stock market really take off. And looking at where the funds stand on the cattle complex, they're at historically high levels as far as net long positions go. So I think there's probably a little bit of risk of long liquidation if some of these other markets start to outperform, and you see that switch in the money management style.
Yeah, I agree. I think there's a lot of these markets are going to start really playing into each other. You're right. With the inflation data, are we going to stop raising rates? I don't think we're going to be cutting them, but how well these cattle and hog prices hold up with an economy that's got these rates at 5.5%, 6% for a while, that could be interesting to see how that handles, how things get handled that way too. So really appreciate you coming on. Oliver Slope, Blue Line Futures in Chicago. We're going to bring it back here to Music City, Music Row.